Welcome. In this video, where is the direction of the XCN coin price? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we closely observe the chart through the lens of technical analysis, we can clearly see a healthy and steadily progressing upward trend line. This rising structure shows that the price has been forming higher lows and higher highs over time. Such upward trends are considered strong and reliable signals in technical analysis, as they indicate that the market is moving in an upward direction. Buyers remain strong and eager, and selling pressure is relatively limited. At the moment, the price action has approached this upward trend line, meaning that a critical support line has been touched. In technical analysis, such touches are considered significant, as these trend lines often act as strong support areas and may trigger a bounce, allowing the price to resume its upward trajectory. If the price gains strong support from this level and begins to accelerate upward, it would be interpreted as a highly positive development for market participants. It would be wise for investors to closely monitor the price action at these levels. If the price bounces upward from this point, confidence in the continuation of the upward trend will be reinforced. This can trigger new buyers to enter the market, which in turn could provide the momentum needed for the price to continue rising more strongly. On the other hand, if this support level is broken to the downside, a short-term correction or pullback could become a possibility. However, looking at the current chart structure, it is evident that this trend line has previously held up multiple times and successfully supported the price. This strengthens the possibility that the price may react positively again after this current touch. At the same time, each touch of such trendliness is referred to in technical analysis as a trend test and is often viewed as a confirmation of the trend's validity. During such trend tests, there is usually an increase in trading volume. Market participants tend to open more positions in anticipation of a potential bounce from this critical support. This can lead to a new wave of upward movement, especially if the price touches the trend line and then breaks upward with increasing buying volume. It would be seen as a strong signal that the uptrend is likely to gain further momentum in the short term. Of course, how the price reacts to this critical trend line can be influenced not only by technical factors, but also by fundamental data. However, the current chart structure shows that the price is still moving within a positive zone and that the uptrend remains valid. Therefore, while remaining cautious, investors should consider the possibility of a bounce from this support line. If the price reacts upward from this level and the following candles close in a way that supports the move, it would confirm that the uptrend remains strong. This would mean that higher levels may be tested in the near future. However, for the uptrend to technically continue, the next resistance levels must also be broken with volume. In such a case, the chart will present a much clearer and stronger picture for investors. On the other hand, if the price dips below this upward trend line, it may trigger a short-term correction. However, even in this case, it does not necessarily mean that the overall upward trend is over. Prices often pull back to gather strength and then resume their upward movement with greater momentum. So even if the trend line is broken, a lower support level may serve as a new buying area and push the price higher. But we can't make a decision based only on trends. Let's also take a look at other metrics. Stay tuned. When examined graphically, it is clearly observed that the price action formed a double top pattern at a certain point and then reversed direction. These types of formations are considered common and strong reversal signals in technical analysis. A double top structure typically indicates that the price has tested a certain resistance level twice, and if both attempts fail, it shows that upward momentum has weakened. This situation is often interpreted as a potential selling opportunity by investors and algorithmic trading systems. The double top formation begins when the price reaches a certain high and then pulls back. Buyers then attempt to regain control and push the price back to that same level. However, this second attempt also fails to surpass the first peak and faces clear rejection. Following the formation of the second peak, the price usually pulls back toward a support level known as the neckline of the pattern. At this stage, a break below the neckline is critical for the pattern's validity. In the current situation, after forming the second top, the price has begun a downward move, which indicates a confirmed bearish trend. This development is also highly meaningful in terms of market psychology. Investors who sought to take profits at the first peak sold their positions, causing the price to pull back. The second upward attempt reveals that the market no longer has the same buying enthusiasm and that supply is overtaking demand. Thus, the second top becomes the area where sellers regain control. With this sign of weakness, especially if the neckline is broken, the decline tends to accelerate and often triggers new short positions by technical traders. For a double top formation to be effective, certain technical conditions are expected to be met. First, there should be a strong upward trend preceding the pattern, which increases the impact of the double top as a reversal signal. Additionally, both peaks should be at relatively similar levels, reinforcing the technical validity of the formation. In the current price structure, these conditions appear to be largely satisfied. There's little difference between the first and second peaks, with both being rejected at similar resistance levels. This shows that sellers are active in this zone and that buying pressure is gradually weakening. The downward movement that begins after the formation typically heads toward short-term support levels in the first stage. Any buying responses at these levels offer clues about the strength of the decline. However, in most cases, the price has the potential to fall as much as the height of the formation. This means the distance from the top of the formation to the neckline can be mirrored downward after the break. Therefore, double top patterns are not only reversal signals, but also important tools for setting technical targets. Looking deeper into market structure, these types of formations are often supported by volume analysis as well. A noticeable decline in volume during the formation of the second top signals that upward momentum is fading. Additionally, an increase in volume when the neckline is broken confirms that selling pressure is strengthening and validates the effectiveness of the pattern. Such volume behavior is an important confirmation tool for professional traders. Furthermore, this downward movement is not just a technical pullback, but also signifies that market participants are psychologically preparing for a reversal. In technical analysis, chart patterns are not merely shapes. They represent investor behavior and expectations. A double top pattern is a strong signal that the market is no longer satisfied with a certain price level and that buying appetite has diminished. The MACD indicator stands out as one of the most reliable momentum indicators used in technical analysis. This indicator measures momentum in price movements and provides traders with potential buy or sell signals. Specifically, the formation of bullish crossovers, when the MACD line crosses above the signal line from below, is considered a strong signal of a bullish reversal. Such a crossover indicates that buying pressure is building in the market and that buyers aiming to gain control of momentum are starting to step in. For this reason, a bullish crossover on the MACD in the current chart analysis would be a technically strong and positive signal. This type of crossover is not merely a directional change on a chart. In fact, there is much deeper market psychology and structure behind this technical signal. A bullish crossover often occurs near bottom areas or at the end of consolidation phases, and typically serves as the first indication of an upward move. At this point, traders generally perceive that conditions are favorable for buying. This is because the crossover signals that sellers are losing strength and buyers are gradually gaining control. Moreover, this is not only a short-term buy signal, but could also suggest the beginning of a potential uptrend in the medium to long term. If we act before the crossover, we may be misled. Therefore, patience is necessary. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.